What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market, last week. Also cover the SoFi stock and why a lot of other stocks are down. So this is going to be an incredible video for you guys. I did a little bit of research to make sure we have a justified answer for why the market is selling off so aggressively, into the week on a Friday, and I have a perfect explanation for you guys, and you are really going to enjoy it. So be sure to smash the like button, be sure to drop a comment if you have any questions, and don't forget to subscribe to the channel if you are not already subscribed. And remember, guys, you can't let the stock market totally consume you. There is a lot of headlines going on inside of the world: inflation, a war, a lot of negative news. Be sure to, have fun on the weekends. I had a couple of drinks last night. Tonight I'm going to the movies. Tomorrow I'm going golfing. So you need to have a schedule in place to get your mind off the stock market once again. The best thing you can be doing if you want to be a long-term investor: dollar cost average twice a month, okay? Buy every 2 weeks on a Friday. That's going to give you 2 buying opportunities per month. You'll have some money from your paychecks. That's the best advice I can give anybody. I am not a financial advisor. Let's get into the video. All right, guys. So we know that, Friday was a horrible day. NASDAQ down about 2%, the usual. But it looks like, a lot of growth stocks were selling off way more aggressive than usual, okay? A lot of people are going on, Twitter, going on Anthony Noto's Twitter, insulting the guy, saying he's doing nothing for the shareholders. Even with him, buying the dip again, on Friday, another $150,000 worth for 3 days now. SoFi was down about 9%, but before you blame SoFi for any reason, you need to take a look at this, guys. So take a look, guys. We have, Friday's sell-off: Affirm, Upstart, 16%, 11, Etsy 11, Toast 10, Teladoc 9, Trade Desk 9, Snowflake 8, Datadog 8, C Limited 8, Cloudflare 8, Robinhood 8, Bill.com 8. So every single one of these companies sold off the exact same as SoFi, and some even more aggressive, okay? So all of these companies that I'm showing you right now, these are not penny stocks. These are not, tiny small caps. These are big companies. Every single company on there, I can tell you, is valued over 7 to 8 billion market cap, all the way up to like 50 plus. These are massive companies being sold off extremely fast, and I think I have the reason why all these companies are getting dumped so hard on Friday. All right, guys, so take a look. This is SoFi institutional ownership, okay? This is not updated exactly on Fintel. As you can see, most of these guys did an update on the 14th of their holding. So, this is not exactly up to date. Right here we have March 1st. So we don't know exactly what these guys are doing, these past couple of weeks. But with what's happening in Russia, I'm telling you right now, some of these big whales are getting liquidated, just because of margin calls and, investments getting hammered, okay? So we have SoftBank, Vanguard, BlackRock, and Silver Lake. These are the big whales, okay? So just take a look at BlackRock. They've been increasing their position, okay? $351 million worth of SoFi. But take a look at this. BlackRock funds just lost $17 billion due to Russian exposure. That's just the tip of the iceberg, as Western banks are owed $121 billion by Russian entities. So guys, not just BlackRock, but other large investment banks are getting hammered by Russia. Margin calls out the wazoo right now. Wall Street banks Goldman Sachs and JP Morgan Chase are pulling out of Russia. I don't have the exact details and exposure for JP Morgan and Goldman Sachs, but we can give you a great estimate right here. Citigroup says total Russian exposure nearly $10 billion, guys. So you can see, I mean, for some of these companies doing $100 billion in revenue, that's $10 billion in revenue, just completely wiped out, of just, investments and stuff like that, okay? Profits. And Citigroup isn't even the biggest bank out of all of them. All right, guys, and on top of the Russian exposure, you have, China delisting headlines coming out this week as well. Alibaba and other Chinese stocks plummet after the SEC identifies 5 companies for potential delisting. You already know the sell-off, with, retail investors isn't just going to be, for those 5 companies. It's going to be for everything China, because that is psychology. So you have Russian exposure, Chinese exposure, guys. There is massive margin calls happening right now, and big whales are getting liquidated extremely quick because they have their hands in so many different baskets. Remember, guys, SoftBank is our biggest holder. They got almost $2 billion worth of SoFi. They're getting hammered around the world extremely hard as well. DIDI, 44% stock plunge leaves SoftBank and Uber with diminishing returns, guys. DIDI just collapsed 44%, on a Friday, okay? That is billions of dollars in market cap absolutely wiped out on delisting fear. So SoftBank is going to be taking a little bit of the heat. And guys, I have Alibaba's institutional investors, okay? If we just scroll down a little bit, we can see, the top investor right now is Goldman Sachs with nearly $5 billion worth of exposure, okay? That is absolutely insane. You also have Price T. Rowe right here with almost $2 billion exposure. If we go back over to SoFi, we can see Price T. Rowe is a big investor in SoFi, $557 million. So you can see that is why you're getting these extreme sell-offs, because there is conflicts in the world right now. China, Russia, Europe right now with inflation. It is absolutely insane what is happening. Remember, guys, this is your psychology I'm bringing to you. You need to have reverse psychology and understand these companies are not bad companies, okay? 16, 11, 11, 10, 9, 9, 9, 8. Retail is getting pushed out because of, put options, of course, but, these big whales are most likely playing put options because they're getting liquidated as well. So it's just a combination of everything happen all at once. So you want to see these types of flushes happen, because that is going to get more weak hands out, and it's going to continue to get, these big banks and these big institutions in better positions, set up for the long term when things get better, because Russian exposure has, fully been liquidated, okay? Big banks like Citi, $10 billion of exposure. You have Goldman Sachs and Alibaba. There's nonstop liquidation happening right now. Margin calls out the wazoo. You can see the details. This is a bad combination happening, but you're going to have great buying opportunities for companies that you truly believe in. I would recommend buying every 2 weeks. And guys, we also have Neo Institutional Ownership, a massive company, in China. Take a look at this, guys. BlackRock right here, they own $2 billion worth. Vanguard owns $1.4 billion. These are the, biggest institutional owners. And if you go back over to SoFi, we have Vanguard, we have BlackRock, we have all the same investors in these exact same companies. So guys, you see exactly what's happening. There is nothing wrong with the SoFi stock at all. A lot of companies are getting absolutely destroyed right now. It is China and Russian exposure. Margin calls are happening. We had a good washout on Friday, but I'm telling you, this week could be another washout, and we could be at full capitulation extremely soon when all the paper hands have exited, because I'm telling you right now, retail cannot handle 20 to 30% drops in a matter of 2 weeks on multiple high quality names. And just to show you guys, a quick little video on SoFi, okay? And remember, guys, I'm getting more bullish on SoFi now because of this, what you're about to hear, okay? Listen to this real quick, okay? 20 seconds.
You've got to be aware of all of this and what's going on with Ukraine and Russia. Do you have Ukrainian and Russian members as part of SoFi?
We do not. We do not today. We operate SoFi and the bank just in the United States. We do have an invest product in Hong Kong. That's our only international market that we operate in as it relates to the SoFi products and services themselves. We do have a technology platform, Galileo, debit and ACH processing, as well as banking as a service, and that operates in the U.S. as well as Mexico and Colombia. So no.
All right, guys, you heard it. Hong Kong, Mexico, U.S. exposure, okay? Nothing correlated to Russia right now, and that is absolutely huge because, once again, you saw the details. Citibank, $10 billion worth of exposure. Remember, guys, those bank earnings are going to really be getting hammered hard, okay? That is massive, massive profits, going to be lost for these big banks. And we just did some videos for you, JP Morgan, 1% growth, and Goldman Sachs, 8% growth. These guys could potentially be looking at negative growth, heading into 2022 on a couple of earnings. So that is something to think about. I think SoFi exceeds their guidance. And I'm telling you right now, it is not a good time to sell SoFi at a loss, because the bank charter license that is going to get SoFi to profitability has not even happened yet, okay? You got to wait till Q2 to see those numbers. So don't sell SoFi at all-time lows when you can see the biggest whales in the game, are having troubles in different, sectors of the market, okay? BlackRock, $17 billion hit. Vanguard, SoftBank, massive exposure with China, Alibaba and also DIDI, okay? These guys are getting hit. They could be trimming a little bit of the positions. I'm telling you right now, retail is getting flushed because of, these big whales positions inside of the market. All right, guys, and I want to tell you right now, SoFi will be here 20 years from now, okay? SoFi Stadium naming rights deal totals $625 million by the end of contract. If we scroll down, this is $30 million annually over a 20-year period, okay? SoFi is not going to be going bankrupt this year. They're not going to be going bankrupt next year. Actually, if you pull up the details, SoFi has about $700 to $800 million in cash. And if you just take a look at their recent earnings, you can see SoFi lost about $111 million without a bank charter license once again. So these losses you could potentially think, could be cut in half, okay? So if they're losing about $100 million, that gives them about, 8 quarters. That's 2 years to survive off this cash burn right now. But if the bank charter, cuts losses in half and brings them to potentially, 50 million loss a year with $800 million, that's going to keep SoFi alive for 4 years. If you do not think SoFi is going to be profitable in the next 2 to 4 years, with their bank charter license, activating in Q2, you should not be invested in the SoFi stock because right now you can see exactly what's happening inside of the market with China and Russian investments for some of the biggest institutions and banks in the entire world. So be sure to do your due diligence and research before you leave a nasty comment on this YouTube channel, leave a nasty comment on Twitter. Any insults toward, the SoFi management team, including Anthony Noto on his Twitter. Just be sure to understand what's going on in the world and understand this has nothing to do with SoFi at all. I just gave you guys 20 stocks at the beginning of the video that have market caps higher than SoFi, in that same, fintech sector as well. These companies are getting absolutely destroyed, okay? So this is a market correction. This is not a SoFi correction once again. If you enjoyed this video, be sure to subscribe to the channel. Don't forget to drop a comment and be sure to smash the like button. You guys saw the details, okay? That Russian exposure is really biting these big whales on the butt. And you can also see the China delisting, headline coming out for America is also causing more liquidation. These big companies like, Neo and also Alibaba, you can see the big banks like Goldman Sachs, have the largest positions inside of the market, okay? So there's a ton of, margin calls happening. The best thing you can do as a long-term investor is dollar cost average twice a month. That is the best advice I can possibly give you, and I think it is great advice. Don't try to buy every single day while the market is plummeting. Buy on a Friday, okay? Every 2 weeks. That is the game plan, and that is what I'm going to be doing, okay? I'm potentially looking to buy some more dips on Friday in these high-quality names like a SoFi because I believe with my research and due diligence that SoFi will be a profitable company much faster than a lot of these other companies that just went to market. Once again, my name is Kyle. Hope you have a great day.